Now, before diving into the meat of today's video, I have a very important announcement. And that is that I made a mistake. If you've been following this channel, you know over the past 2 years, I've uploaded over 300 cryptocurrency videos, 340 to be precise. And of those 340, I've only done 3, count them 1, 2, 3, sponsored even mentions. And I've actually done 0 dedicated sponsored videos, just sections of videos where I would shout out sponsors, and all of those I had considered to be fully vetted. Now, I don't want to draw any more attention to this particular organization for the reasons that I'm not quite sure what's going on in that organization. Before I covered this organization, I had seen other very respected cryptocurrency content creators cover it, from the likes of Ivan on Tech to Crypto, Chico Crypto, people that I literally follow, and I genuinely love and respect the content and the research they do. They also have a very legitimate team, some crypto celebrities behind them, as well as licenses and registrations backing up every one of their claims. However, some red flags brought up were that there was too high of guaranteed returns and too big of an affiliate program for this to be considered 100% above board. Now, after digging back in, there's still no proof, right, that this isn't a legitimate organization, but there's enough evidence that I'm removing the video, and I feel the need to apologize to you for not vetting this thoroughly enough. Now, I know you follow me for my unadulterated and honest opinions, and I've always been 100% transparent about all the sponsorships. All 3 of the sponsorships that I've done have been both disclosed verbally as well as completely with full details about the type of payment, how the payment was made, when it was made, all in the description below. The videos, a lot of channels don't do that, but I care about the transparency on this channel. I care that you know when I say something on my videos that is 100% my belief. For that reason, I promise and I pledge to do even better than I have been, because you deserve better, because cryptocurrency deserves the best. And if we want to have a revolution, it starts with each one of us putting it on ourselves to uphold the highest standards. And that is what I pledge to you going forward. So with that, let's get on with the video. Happy Monday and welcome to the beginning of the holiday season. I certainly hope you're taking advantage of all these crazy Cyber Monday deals. I know they're flooding in. Get your gifts, stock up, get something special for yourself. You deserve it. After all we've been through in the crypto market, certainly emotionally, we all deserve a little bit of reward. So go ahead, treat yourself. Elio Trades said so. So if you've been anywhere in the crypto community over the last, year or so, pretty much we've been hearing about the halving everywhere we go. There was a tweet that I saw that made me really want to dig into this question. Is the halving going to produce the result that we want it to produce? So the tweet in question is by a one Jason A. Williams, who is a co-founder of Morgan Creek Digital, which you might know from one of the most ubiquitous Twitter personalities in all of cryptocurrency, and that is, of course, Anthony Pompliano, better known as Pomp. Now, Pomp is also a co-founder of Morgan Creek Digital and has been claiming that the halving will be the biggest event, the biggest catalyst for a new higher price in Bitcoin, really comparing it to the inflation and the constant printing of money by the Fed. Meanwhile, we have Jason Williams, who is also a co-founder of Morgan Creek Digital, saying Bitcoin halving in May 2020 won't do anything to the price. It will be a non-event. Before we get all upset at Mr. Jason A. Williams and maybe even Elio Trades for bringing this up, let's just dive into what has happened in past halvings, what a non-event in May 2020 means, and then we can start to interpret whether or not this will or won't help the Bitcoin price. So before we commence ripping Jason A. Williams to shreds over this, let's go ahead and first analyze what has happened in past halvings. NCKBTC has posted a little infographic here showing that essentially we had 364 days of bullish action after the 2012 halving, and after the second halving in 2016 on the 7th of September, we had 511 days till the top of the market cycle. So you could see there that the market cycles look like they're expanding, getting longer. And if that trend continues, then we could expect that this next bull run could be even longer. And that's why we could work our way up to what many feel might be almost foolishly large prices in Bitcoin. But what if there's actually another way to be looking at this? There is a case to be made that the halving itself wasn't the catalyst for the 2016 bull run, and that actually it was the altcoin mania, the ICO boom made possible by the ERC20 standard Ethereum smart contract that has actually enabled almost anyone to start their own cryptocurrency project. That lowered the barrier, the technical barrier to actually start a new crypto. And we saw an explosion in the space, kind of akin to the dot-com explosion back in the 90s, where there was a huge surge of attention and excitement in the space. Now, unfortunately, a lot of that excitement hasn't panned out in the revolutionary change that we wanted to see, although there have been big winners that got their start back in the 2017 era. We have been, on the whole, fairly disappointed by what came out of such an insane and capital-intensive boom in the market. Nonetheless, I believe that that ICO boom had a significant impact on what was going on with Bitcoin, and that the need to use Bitcoin as an intermediary between the new tokens that were coming out and the fiat currencies that most people held, well, I believe that could have played a significant role in the last bull run, and that we can't ignore that revolution that was the ERC20 smart contract. Now, if we look back at 2012, I think it's a little difficult to really say what would or wouldn't have been a parallel between where we are now and then, as Bitcoin was so nascent so early that it's pretty difficult to compare. So there is an argument that it wasn't actually the halving, but an actual innovation in the technology that is cryptocurrency that enabled the bull run that was 2016 and 2017. Now, that would mean that we are either one technical innovation away from another super cycle, or that all we have to do is wait for the halving. But there's a part of me, a gut feeling, that everything that we've been waiting for, whether it be the ETF, whether it be backed, whether it be the halving, these very obvious things that you hear everyone and their grandma talking about, the ones that you're hearing on CNBC, the ones that you're seeing everyone on crypto YouTube and crypto Twitter talking about, it always seems like those things are maybe a little too obvious, and that the fact that they're so obvious means that they won't happen. It's kind of like the law of markets, that if everybody's looking at something, then it's too good to be true. And that being a contrarian in cryptocurrency is where you make the most money. When people think that it's going down into the depths and that it's dead, that's when you should buy. And that when everybody thinks it's going to boom, maybe that's when you should be very cautious. All I'm saying is that crypto has been good at doing one thing, which is what you don't expect. So that makes me feel, just on a sentiment level, that the halving might turn out very differently than we had originally anticipated. But I don't want you to think that I'm getting bearish here. I'm not. I'm very bullish. I just wanted to present that contrarian view. Let's hop in and present the bullish case here that the halving actually will fulfill all of your wildest fantasies about Bitcoin's price movement and more. The halving is important because it reduces the supply coming in. And that means that Bitcoin either needs to sustain its security model on fees alone, or that the actual Bitcoin price and the mining reward will need to be extraordinarily high based on extremely high prices. So just to put this in perspective, in several decades down the line, between 2100 and 2140, let's be honest, a lot of us won't even see this time period, but only 2.5 Bitcoin will be mined over the whole 40 years. That just gives you a sense of where this whole industry is headed. That after 2100, the mining is essentially nothing. You're getting fractions of a fraction of a fraction of a Bitcoin. And for that to sustain what is many thousands of dollars in mining equipment and electricity cost, God knows what electricity will cost or what mining equipment will look like at that time. But it just shows you that this whole security model of the proof of work model will need to sustain itself with pretty much no Bitcoin coming in, which will mean that either Bitcoin is worth a tremendous amount or the fee structure will allow for those fees to cover the entire network. But we don't want exorbitant fees on Bitcoin, or else that becomes, I guess, kind of another question, which is how adoptable is a system with exorbitant fees? And does this really fix the problem that we wanted to fix in society? All good questions. But this is a good perspective for you, is understanding that as this situation matures, Bitcoin will essentially stop flowing into the world. And that will mean that the only way to get Bitcoin is from someone else that has it. These miners won't be dumping on the market. Furthermore, we've seen that the Hottel is real. That's right. 60% of Bitcoin's circulating supply just under 12 million Bitcoin has not moved in 12 months. That means that people are not fazed by this bear market and that the vast majority of token holders are simply just not touching their Bitcoin. That hodl mentality is what's going to separate this asset class. I mean, how many asset classes do you have the vast majority of people refusing to sell? It is an absolutely incredible phenomenon that over time will eventually just exhaust the actual amount of people who are trading, and the amount of people looking to buy will have to continually bid higher. Seems to make sense to me. Yet regardless of Bitcoin's bearish and weak price action since the 14,000 top back in June, July, we can see that almost every conceivable metric, on-chain metric for Bitcoin is headed up and to the right. Wallets active, the amount of hash rate or protection over the network, the amount of custodial solutions or big players starting to enter the game, the amount of options of places to buy and sell Bitcoin. This is becoming such a legitimate asset class that it's hard to imagine that it would have any worse results on this halving than on previous halvings. The only question is, have those results already been priced in? What is the real current value of the Bitcoin network, and how are people actually using and transacting upon it? These are all questions that can be argued one way or the other, but there is no definitive answer. So after analyzing both viewpoints, the potential halving being the catalyst to this insane high new Bitcoin price, as well as the concept that the halving might actually be a nothing burger and that it might be a very overhyped event, such as the launch of Backed. Well, I think that the truth is on neither extreme. I personally think that the halving will have an effect, but like it did in previous years, it will take some time to really kick in. Currently, today, according to CoinMarketCap, we have a Bitcoin daily volume, 24-hour volume, of over $17 billion. Now, we know that there is dramatic, crazy inflation, wash trading, fake volumes. And I've heard somewhere that the actual Bitcoin volume is about 1/50th of what is reported. Well, let's just extend that and make it 1/100th of what is reported here. And that would take the Bitcoin daily trading volume down to $175 roughly million per day instead of the 17 billion that's reported. Well, if what we're saying is that on a daily basis currently with a 12.5 Bitcoin mined per block, that's every 10 minutes, there's 6 10-minute periods in an hour and 24 hours in a day. That gives you 1,800 Bitcoin mined each and every day. We multiply that by the current Bitcoin price, and let's just call it 7,000 for easy numbers. And what we get is $12.6 million. That might sound like a lot of money. However, when you do the math here, even if we take 1/100th of the reported Bitcoin volume at $175 million per day, you're looking at that $12 million being a fraction of what is reported on a daily basis. We're looking at something that is very small amount of the Bitcoin daily trading volume. So the question is, for rough math, let's just do 12.6 divided by 175. And what we get is about 7%, right? So 7% of the daily trading volume is actually the volume that's created by these miners. So is that 7%, which is now going to get cut in half, right? And I don't see the Bitcoin trading volume going down. So is that 7% now getting cut down to 3.5%? Is that 3.5% difference going to create this dramatic, explosive growth on the Bitcoin price? I don't know. Do those numbers make sense to you? You let me know in the comments section below. The question is that going to have that dramatic, uplifting, explosive pressure on the Bitcoin price that we all want? And the answer is, I'm not sure. But I can say that long term, this essentially creates a system where there's only hodlers, and you're going to have to go to the hodlers to buy coins. I know most hodlers won't sell below 100,000, and there's even a select amount that will never sell even if it goes above 1 million. They want to live in a world where Bitcoin becomes a new standard and they don't have to convert back to fiat. So there's a lot of excitement there about how long people will hold, how people are not selling, and that the less mined coins coming into the ecosystem means less easy ways to buy and accumulate new Bitcoin. But the question remains, is the halving enough? Or do we need another technological innovation like the ERC-20 contract that brought so much new attention and excitement into the space? For me, I believe that the answer is somewhere between the two. I think the halving will create a lot more excitement and incentive around owning and hodling Bitcoin. However, I also believe that we are maybe 1 or 2 technological innovations shy of a true super cycle. Now, let me know what you guys think about this in the comment section below. I'm very curious. I've just been thinking a lot about the halving and wondering whether it's going to have the effect that everyone wants it to have. Believe me, I want to be on the moon after the halving, just like all of you. I'm just pointing out that this one might be different, but I want to know what you guys think in the comment section below. That's just my 2 Satoshis. Now, let's move on to a really fun clip from none other than Max Keiser. Now, if you know Max Keiser, he's been a very early Bitcoin bull, and Max Keiser is going to share with you what he believes is China's endgame in this whole crypto world.
What's happening is that China is getting ready to open the trap door on the US dollar. Here's what I'm hearing, Daniela. China is about to announce that they, in fact, have not just under 2,000 tons of gold, but closer to 20,000 tons of gold on a very aggressive move to put the final nail into the US dollar.
What's your source for that?
As you know, we do our show that's broadcast globally. And we have a lot of contacts all over Asia and in Eurasia and naturally in Russia. And the feeling is that this is the time for China to now step out and put to rest this idea of censoring their global trade, right, with the U.S. censoring SWIFT and other things that they do to curtail China in other countries, because China's making their big move, the big move for the 21st century. They're going to pull the trapdoor. And let me just add that they're also, as has been reported by the media, rolling out a cryptocurrency. A lot of the details have not been divulged. I can tell you that that cryptocurrency China's rolling out will be backed by gold. It's a two-prong announcement. Number one, okay, China's got 20,000 tons of gold. Number two, we're rolling out a crypto coin backed by gold, and the dollar is toast. The dollar's going, like every other paper money in history, to zero. And you say, where's gold going? Is it going to 5,000 to 10,000? It doesn't matter. In dollar terms, gold is going to infinity. In dollar terms, Bitcoin is going to infinity because the dollar is going to zero, like every piece of garbage fiat money before it.
So there it is. In dollar terms, Bitcoin is going to infinity. I just wanted to present that sort of view that China now has this endgame to deploy a really dominating cryptocurrency. And what that would mean for the US dollar, are really the US customers or US investors going to start buying up this new Chinese crypto? I highly doubt it. You know, it just opens the door so much for a Bitcoin, a non-correlated asset. And I think that this could spell out tremendously bullish things in the future. Let me know what you guys think about Max Keiser and that clip we just aired below. I'm very bullish about what this could mean for Bitcoin, for gold, for any kind of hard asset. And of course, for cryptocurrency adoption in general. I think that these are the types of races, these are the types of changes that could truly spark very bullish trend in cryptocurrency. The halving alone might be a part of it, but maybe not the whole cake here. We might need some paradigm shift either on the macroeconomic level, on the geopolitical level, or even within the tech itself, like the ERC20 smart contract. Of course, let me know what you guys think in the comment section below. We're gonna end this with something super fun. Here's a YouTuber called Supercar Blondie showing off a, let's just say, a very Bitcoin rich watch. It's the holiday season, it's the gift buying and gift giving season, so maybe this is a gift that you'll consider giving to one of your friends.
Ready? Oh my god. This is the world's first functional Bitcoin watch. It's the Encrypto from Frank Muller. Let me show you. Right here, look, it has your own QR code on the watch. Guess how much money is linked to this QR code? This will scan the QR code and tell you how much money is currently on this Bitcoin account. Ready? $17 million is currently on this Bitcoin account. That is crazy. Oh my god. So instead of having your QR code just on a piece of paper, you're gonna have it here on the watch. Now, the crazier thing, you guys, is this. Look at what's in this little pocket here. This is a private key where your $17 million is actually stored. Look at this. This is a one-time USB stick that you need to break into to access your money. If I threw this onto the F1 track, it'd be gone. 17 million bucks gone. That is. Guys, you can have the watch back now. Done. Bye.
Well, that's it for me. I hope you guys enjoyed today's show. If you enjoyed today's episode, throw a like on this video. It's a free and easy way to support the channel. If you want to keep the conversation going, leave a comment in the comment section below and we'll keep chatting there. If you're not already subscribed, I encourage you to hit that sub button and of course turn on those notifications by clicking the little bell. As usual, I'm Elio Trades, you're watching FUD TV, and I'll see you very soon on the next episode.